Hi, I'm Emma and I'm the team leader of our buyers agency department here at Momentum Wealth. I'm joined here today by Damian, our Managing Director. Thank you, Damian.
Hi, Emma.
Just to chat about some of the key trends that we've seen in the Perth residential market in 2018. We're going to talk about some of the key movements that we're noticing in the market, both from a research perspective, but also share some on-the-ground experiences from our team as well. So, Damian, let me start off by asking about the Perth rental market. We've seen some pretty big changes to this part of the market this year. Could you let us know a bit about those and what that means for investors?
We have indeed, Emma. It's been a pretty rapid fall in vacancy rates. We were above 7% only about 18 months ago, and now it's, the last survey it was down to 3.3%. So that's below the 10-year average in Perth of 3.9%. So it's all looking quite promising for landlords coming into 2019.
That's a significant change in a short space of time. How is that affecting leasing activity in terms of home opens and applications and the time on market for these properties?
Yeah, so far what we've seen has been the speed up in the lease times, how long it takes to lease a property, and the number of applications. We haven't seen a lot of rent moves yet, but it will certainly be coming not too far away. I think when we get sub 3%, that's when we're really going to start to see those rents start to really move up.
Oh, fantastic. Something that would be positive news for existing property owners.
Good news after a few years of rents going backwards $100. It'll be nice to see some rents going forward.
Absolutely. Another trend that we're seeing that could continue to impact the rental market is a decline in new building starts. So people not entering the housing market through building a property.
Yeah.
Do you have any comments on the cause of that and how that could impact the rental market moving forward?
I think it's been a confidence issue. A lot of people have not gone into build homes, lack of job confidence, particularly in 15 and 16 into early 17, but also the fact that the houses that were 1 or 2 years old were actually cheaper to buy than buying a block of land and building. And because the supply side takes around 18 months to adjust to the market, that's where we could see a bit of a rental shortage next year. Because even if investors want to bring new stock to market, whether it's apartments or house and land product across the board, that will take quite a time to get to market. So on the current trends, we certainly could see quite a low vacancy rate into 2019 and even into 2020.
We've talked often about how the rental market tends to precede recovery in the residential sales market, but I understand we're starting to see some signs of that already.
We are, yes, certainly in the some of the good quality areas where we've seen buyers competing and good properties go under offer fairly quickly. So what we'd expect to see as the rental market improves, you will get investors coming back into the marketplace. They've been pretty low in terms of percentage buyers over the last few years, and some tenants will make adjustments. That might mean they'll go into the buying market, so that'll increase the volume of sales, and people will share maybe 3 to a house instead of 2. So you always get those adjustments, but we would expect to see it's going to take, to get a lot of new stock in the market, it is going to take a couple of years to start that catch up.
Yeah, I noticed with the team recently we're looking at some price growth in Perth. And the central sub-region of Perth, we noticed prices going up about a year ago, and checking the data from REWA and other sources showed that was the case. I know for us putting in offers for our clients, we're competing often against 2 or 3 other offers at a time in a market where perhaps people think the overall market is soft. So it's not really one property market we're working with, is it?
No, it's interesting. Most people, they read the headline figure and it says, median price down 2 or 3 or 4% or whatever that number is, and people think, oh, well, the property market's bad. But as you mentioned there, REWA stats show at least 1/3 of the suburbs, the median price over that, which would appear to be a down market, 1/3 of the suburbs, the median price is up. So it's certainly a mixed market, and so you just shouldn't just rely on headline figures to state that that's the way the whole market is going.
Absolutely. And look, it's interesting when we look at our affordability rating compared to other cities in Australia. It seems that there's a bit of room for our property prices to go up. What would your comment be on that?
Well, Perth's had 10 years of very flat prices, and we actually do have of any state, we have the highest average income. A lot of that is related to the mining sector, and with our prices where they are, our house price to average income ratio is about 5.5, 5.6, around that range, whereas in Sydney and Melbourne it's 8 and 9 or thereabouts for those cities. So certainly we have more upside. I'm not expecting it to boom by any stretch of the imagination, but if the market does start to recover, there's certainly a lot more affordability that could push prices up. We're less likely to be capped by affordability than some of the other cities.
Fantastic. And that's good news for first home buyers who would rather buy than pay those rising rents as well. So hopefully we'll bring some of them.
Absolutely. And there's suburbs in Perth, you can get a house 25 kilometres from the city for $250,000. Now, they're not fashionable, they're not great, but certainly it's the most affordable I've seen in Perth in about 20 years.
Now, we can't really talk about market trends without addressing the elephant in the room, and that is negative gearing and a potential election and change of government. So what can investors do to prepare for that potential change, and what would be your advice to them if they're considering investing with that change looming on the horizon?
Well, a couple of things to focus on, Emma. Firstly, the changes will not be retrospective, so if you buy before the election, they'll announce the date, I assume, when it will start. If you buy a property before then, you won't be subject to the changes to negative gearing. You can still negatively gear, so you've got a window up until that election, and we'll wait to see what the announcement is. Sure. A couple of the other things, so rents will definitely go up. It'll be some areas they'll go up substantially, and it won't happen overnight, but the established suburbs where there's not a lot of new supply, that's where we're going to see the biggest rent increases. The outer suburban areas, perhaps where there's a lot of house and land that's competing, you might find that the rents don't go up quite as much, but we'll certainly see a rent increase. It's just simple economics 101. And the other thing to focus on is, if you're an investor, when you resell, even if you're buying brand new, you want to make sure that the stock you have is suitable to an owner-occupier, because a lot of investors are going to target brand new, but you need someone to sell it to at the end. And certainly, as you know, in our portfolio, we've always targeted properties that are suitable not only for investment, but also generally appeal to owner-occupiers as well. That means that your property is still going to have a good resale value if and when you do decide to sell it.
Well, thanks for joining us, Damian.
Pleasure, Emma.
Thanks for your feedback today. And for anyone who's considering investing, but if you've got any concerns or some questions about the things we've raised today, give us a call. One of our team would love to help.